Welcome to the Abra Money 3.0 show, your guide to the future of all things money. This is the part 2 of a 3-part series of our CEO Bill Barhydt in conversation with Saifedean Ammous, an economist and the author of the hugely popular book, The Bitcoin Standard. To listen to the previous conversation, please check out the previous episodes of the Money 3.0 show. In this episode, Bill and Saif take a longer-term view and talk about how we drive the mainstream global adoption of Bitcoin. A quick note: the information presented in this podcast is provided for informational purposes only and should not be used or construed as an offer to sell or solicitation of an offer to buy any of the financial assets discussed. This report should not be construed as advice designed to meet the particular investment needs of any investor. Any opinions expressed herein are either subject to change. Neither Abra nor any of the participants of the podcast make any representations as to the suitability or appropriateness of these financial assets for individual investors. Investors must take their own determination either alone or in consultation with their own financial advisors as to suitability or appropriateness of such investments. Without any further ado, over to you, Bill.
Let's talk about where this is going. I mean, first of all, does anything worry you about Bitcoin? Like when you look at what's happening in the world of Bitcoin, is there something where you're like, oh my God, this is crazy, or I wish this wasn't happening, or I wish this was happening, but it's not happening?
I mean, the thing that worries me in general, my main concern about Bitcoin is the number of nodes. If the number of nodes for Bitcoin drops a lot, then I think Bitcoin has a problem. So this is generally my biggest red flag, because that's what maintains Bitcoin's decentralization. Bitcoin needs these tens of thousands of unherdable cats, basically, around the world, so that it continues to be impossible for anybody to herd all of these nodes or herd all of these cats together. And so as long as that continues, then Bitcoin's healthy. So if that declines, that would be my kind of red flag to worry about it, if the number of nodes declines. And that's why I think it's really important that the cost of running a node continues to be very low, so that many people are able to do it. Beyond that, I think it's generally like a liquidity crisis, a financial crisis in the larger economy could be problematic for Bitcoin. My mind is not made up about the fact whether Bitcoin would come out of a real recession, depression, higher than how it entered it. I still think, it's early enough that Bitcoin is small and insignificant enough that it may not necessarily work out great for people to hold it as a hedge against the recession or against inflation or against deflation or against all kinds of other scenarios that can happen. Bitcoin is still young enough. However, I have to say that over the last few months, it's been remarkably encouraging. The fact that global markets are collapsing, things are changing all over the world, people are losing their money, losing their jobs. Everything is going to the dogs, basically. And yet Bitcoin is at a higher price now than where it was 1 year ago. Sure. Or probably around the same. I'm not sure. No, it is higher. It is higher than where it was a year ago.
It's a little bit higher. I think it's about 10% higher than where it was a year ago.
Yeah.
And I think it was March 11th and 12th, I believe it fell 50% in lockstep with the equity markets, and then has been on a actually slightly uncorrelated march. Mostly correlated, but even on the down days, it seems to have a good relative strength, which is encouraging. But like you said, it's very, very early. So beyond, I think that the node count, the node decentralization is a really good point. When you think about the broader ecosystem, and I'm using the term very loosely, for all the participants, miners, node holders. I'll throw in traders and exchanges, even though they're outside of the matrix. Do you feel like anything specific is missing or not working well that you wish would work differently?
Not really. I think the nice thing about Bitcoin is that you control your own node and you do whatever you want with it, and then you're completely powerless over other people's nodes. So I think, Bitcoin teaches you Zen contentment and just accepting the world as it is, because you can't force people to change their nodes. And so
Yeah.
you need to just come to terms with the fact that this is what it is. So I tend to have a very, live and let live idea about it. And, I mean, I don't think that I don't have a sort of, I wish this would happen, or I wish businesses would do this. Um, yeah, I think, and also there's also the important point that I have, which is that Bitcoin is not a political project. It's not a project that needs people to agree and vote and come to a joint framework of how they want to treat certain topics. It's a market phenomena, and it's only going to succeed if it continues to provide people with the incentive for it to succeed. And so it doesn't need anybody to be its guardian. It's got what people on Twitter like to call the number go up technology, and that's the best marketing and advertisement. That's why people come here, because the price of Bitcoin keeps going up. It attracts people, and then as long as they keep coming in and buying in more Bitcoin, the number goes up, and Bitcoin works.
But do you fear that regulation could stop Bitcoin still? Or do you think that we're past that at this point, where it's decentralized enough where even the United States and China couldn't, quote unquote, stop it at this point?
It's, I think, in terms of if governments were to really go out after Bitcoin, I think they would not be able to kill it completely. And I think it would be a very expensive war to fight, and it would be futile. And I think they're just not going to do it. I might be wrong, but I lean more and more toward the fact that this is not going to be the case. I think there was a very interesting moment when discussing the Silk Road case.
Mm-hmm.
One of the prosecutors, or one of the investigators who was going after the Silk Road, I remember her talking in an interview saying something along the lines of, well, we looked at this thing and we started looking at Bitcoin, and our initial impulse was that we wanted to ban it. But then we realized, she says something along the lines, we realized that that's not really going to be very practical. And then we realized, actually, we can just learn how to look at the blockchain and then start tracking the criminals and finding people. And I think this is a really, really, really powerful moment. Like, there was a point.
By the way, the first two people they found were her colleagues, right?
Yeah.
Right, from the FBI, as I recall. So
absolutely.
That should tell you something right there. But sorry to interrupt. Go finish.
Yeah, no, actually, this is the perfect complement to that point. That the two reactions that happened from government was, the first one is, how the hell am I going to shut this thing down? It's too difficult. Let me just go after individual people that are using it. And I think this is the powerful thing, which is, let me use this technology because it is so powerful. Let me just use it as it is. Absolutely. In order to catch those people. And then the second reaction, which is the other FBI agents, which is, wow, this is digital gold on the internet, and it's out there. I'm going to go and get some for myself. Yeah. And I also met with another investigator from some other government department, and she was discussing other cases that she had had, and it was off the record, so I won't mention her name. But she said that she was talking about all of crime and Bitcoin and so on. And then I asked her, "So do you own Bitcoin?" She paused for a second and said, "Yeah." And it's amazing.
She hesitated. Why do you think she was hesitant to admit it?
I think she was just surprised by the question, because she and particularly because she was taking on the the whole this is for crime and we're out there to save to stop crime, and but basically she bought it herself. And I think generally the way that I see it is that to try and ban Bitcoin is like trying to ban gunpowder. Like when gunpowder was invented, if let's say Germany decided, all right, well, we're going to make gunpowder illegal, because if we let people have gunpowder, then they can just shoot all of our soldiers who have swords and sticks, and then they will be able to destroy our army. So therefore, we're just going to ban gunpowder. I think in these kind of technologies that are adversarial, you'd be foolish to try and ban the technology. The only logical course of action, which intuitively you see all governments head toward, and all government agents individually, more importantly, head toward, is we want to make the most of this. We want to take advantage of it. We want to get everybody in our army to have gunpowder. We want to use as much gunpowder as possible. So I think that aspect of it, and then also the time aspect, is that I think that boat has sailed. Like in 2012, 2013, part of the reason that I was not buying Bitcoin at that time is because there was definitely the distinct possibility that you could be prosecuted at some point for owning Bitcoin. And I thought initially in my mind, the way that I thought it would be brought down was some link to crime or terrorism or child pornography or whatever. And then it would be made so that if you're using Bitcoin, you are involved with this thing. And then everybody who uses Bitcoin is guilty until proven innocent. And, you could end up in jail or end up in a 10-year court fight trying to prove this. I think in 2011, 2012, something like this might have happened. But for me personally, the turning point was the Silk Road bust, because after it happened, two things happened. First of all, Bitcoin didn't die. And second of all, not only did it not die, but also the price rose significantly, which shows that this thing was being used for other things. And it's if this was running the world's biggest darknet market and they still couldn't shut it down, then maybe it has legs.
Sure. Okay, so we've established that Bitcoin's not going anywhere. We've established that some unnamed regulators out there, at least one, she holds some Bitcoin. I actually know a couple myself, so we won't name names. That's good. Do you think that the adoption comes like with a massive spike? Do you think that Bitcoin adoption comes with like a smooth curve over time? You mentioned earlier, right? 7 billion people wake up every morning and could influence what happens with this thing, but they don't seem to yet. How does it get to the point where everyone's got Bitcoin? Is it like some huge depression causes a massive spike, or is it just a gradual curve over another 15 years?
I mean, I honestly don't know, but looking at the Plan B's stock to flow model and examining the dynamics around the last two halvings, does seem to suggest that we're going to be going through this boom bust cycle with every boom bust 4-year cycle with the halving. And with each one, we're going to be adding another zero, another digit to the price. It seems like this is how it's going. So, people dismiss it, and then they keep dismissing it, and then the number go up. And, particularly after the halving, because the new supply is reduced. So when the new supply is reduced, you have much less selling pressure on the market every day. And that leads to prices rising. But then once prices start rising, people start paying more attention. That leads to more people coming in. And then more and more they come in, and then, the price starts going parabolic. And at that point, you have a lot of people becoming over leveraged, a lot of people putting in money that they need to sell, that they need to take out. So, whatever it takes, eventually we'll get to a point where we're over leveraged, and then the price crashes when, the small little change in the price, a lot of people get liquidated, a lot of people need to sell. And then you start getting more and more selling pressure, and then the bubble turns into a bust. And now, because of course, also as the price rises, the selling pressure increases, because the value of the new coins that are being generated would increase. And so maybe it's going to be like this hype cycle being repeated every 4 years, or maybe we'll get some kind of event that leads to much faster adoption. But yeah, I don't have a crystal ball, so my guess is as good as anyone's.
So bringing that back to the dollar, right? I mean, it looks like in absolute terms, right? In terms of currency inflation, the dollar's probably lost 50+% of its value recently, right? Which is insane. The only reason it hasn't collapsed is because other currencies have lost more value, and we don't have anything else yet.
We don't have anything else that you can send internationally. You have gold, but you can't.
You got to mail it, right?
Exactly.
But this situation is untenable, right? So long term? I mean, how long do you think the dollar can last as a global reserve currency if we inflate its value to zero at the rate we're going?
Yeah, I mean, I've learned the hard way not to write the old greenback off too quickly. I mean, it's been separated from gold backing for 50 years now already,
Right.
and we've had 50 years of people saying, "Yep, this is it. This is going to be the end. This is it. It's going to die. It's going to finish," and it's been around and it's survived a lot of people who have called it, who have said. Who have called for its demise. So
Yeah.
I think what some of the gold bugs like me might underappreciate it, or I used to underappreciate, is just the enormous value that exists for the settlement network, for the international settlement network.
Yeah.
In other words, gold in the gold bug mind, you think of gold as being money because it's that coin in your hand, or it's that bar that's money, but that's very terrible money. That's 15th century money. It's not money that is very useful even in the 19th century. In the 19th century, people stopped using gold coins and were using checkbooks and paper notes backed by gold coins because it's not very convenient to be moving and dividing the gold coins. So I think in the same way that the Bitcoin network is made up of the Bitcoin token and the network, you need to think about gold and fiat payments as being about the token as well as the rails that send that payment. And so the differences in inflation rate, or the differences in annual growth rate and supply between gold and dollar in the last 50 years have proven not to be so far at least, have proven not to be bad enough or big enough to destroy the dollar. So people still don't have the option of using gold for money because you can't have gold banking and you can't have international transfers. So your choice is the dollar and other currencies that can be used on international banking infrastructure. But the people who control the rails are the ones who get to pick their token. And so if you don't control the rails, you don't get to pick your token. And the people who control the rails want the US dollar.
So in that vein, when you think about like digitizing or tokenizing these existing currencies, right? Like, Libra, which could be a basket of them as a new security, or these CBDC, central bank digital currency, I think it means. Do they even matter? I mean, is it just, on the one hand, it's lipstick on a pig, but I guess you could just create more of them even easier if you don't have a paper printing press, right? If it's a digital printing press.
Yeah,
is there any other way to think about it? I mean, what problem does it solve at that point?
it doesn't. And in fact, 80, 90% of all money is already digital. So the physical dollars don't make up more than, I think, 10 or 20% of the entire dollar supply.
Mm-hmm.
So we already have central bank digital currencies, and they are digital in the sense that, what the currency, what makes the dollar money is not the fact that some of the dollars are physical. What makes the physical dollars money is the fact that they refer to the government's money. So in a sense, they are all digital. And this central bank digital currency thing, I think it makes no sense other than just as a way to pretend to be performing something innovative. Because ultimately what makes Bitcoin or any digital currency unique, or what the real innovation there, is the idea that we take the monetary policy out of the hands of the economists and central bankers. They don't get to decide what is money and what isn't. And we take the payment clearance out of the hands of a central bank and turn it into software. So software decides the money supply, and software decides if I can send you one coin or not. And it decides it based on whether I have the private key for that coin or not. And if I do, it goes through regardless of who I am, what I've done, all the legal things that might be associated with me. So this kind of thing, both of these functions involve the replacement of human judgment with technology. And so if central banks do this, if central banks actually implement a currency with a fixed algorithmic money supply and with the ability of the central bank to freeze somebody's account, with no ability for central banks to freeze somebody's account, they'd basically be putting themselves out of business.
That's right.
Just you set the supply, and then the computer does the job, and the computer clears all the payments. You put yourself out of business. You can't use the currency to conduct monetary policy. You can't use it to finance government, and you can't use it to enforce government policies in terms of
you can't borrow against it to fight wars either, because you can't just keep printing more to finance yourself, right?
Yeah, exactly.
So put you out of the war business.
Exactly. So, I mean, I think, if they were going to introduce a real digital currency that they can't control, it would be great. But obviously, you can't do that. There's no way that they're going to introduce something and then decide, all right, well, we're going to pass a law that says we can't change this. Well, we can also pass a law that says we can,
right,
and then we can change it. So I don't really see it being anything more than just a... well, there is the aspect of its publicity. There is a possibility that it could be more, in a sense that it could be the door for basically central banks obviating the need for banks. Everybody just gets there.
But that's the opposite direction. That actually allows governments to exert even more control.
Exactly. Yeah. So we go back to the Soviet model of having just one bank for the entire country. And everybody has their own account at the one bank, and it's all done on one digital ledger. And the central bank, every time I send you a coin, it's registered at the central bank's ledger. And then who needs banks then?
Yeah.
So there is potential for that, but obviously I can imagine banks are not going to be too fond of this kind of idea, and I can't imagine central banks pulling it off.
Yep.
Thanks for listening to this incredible interview. To find out more about Abra, visit abra.com. Hit the subscribe button to be notified when we publish the part 3 of this conversation, where Bill and Saif take a macroeconomic view of the world today.